What does the market meltdown mean for the US stock market? Don't forget to hit like and subscribe to Finance Bible to ensure you are kept up to date on all the latest finance and investing news and data. Well, let's discuss what today's events indicate and what they might mean for the US. With the stock market crashing today, fears have gripped many, both inside and outside the financial industry. The situation evokes memories of the 2008 financial crisis, when the market's shift ushered in a new era, a bear market compounded by a housing bubble that detonated harsh reality for many debt holders. The aftermath was devastating for industries like housing, auto manufacturing, technology, and banking, leaving an entire generation scarred. Today feels eerily similar. We stand on the brink of something potentially catastrophic. Welcome back to Finance Bible. Today, we're breaking down what's happening in the stock market and what it means for you. But first, here's Mandy Shu, head of derivatives market intelligence at CBOE.
If you look at last Friday, what we saw was a broad-based increase in equity volatility across indices, across markets, US, Europe, Asia, on the back of worse than expected US data and growing fears of recession. That's very well understood and well deserved. And then you look at what happened pre-market today with the VIX exceeding highs that we haven't seen since March of 2020, with no change in really any macro fundamental news. Sure, we got the big sell-off in Japan, but in terms of what has changed for U.S. equity markets over the weekend, nothing. So to me, the price action this morning and today is very much positioning driven. It's very much liquidity driven, whereas the price action we saw on Friday was much more fundamentally justified.
So while last week saw a downturn in the stock market, today's events are more influenced by global macroeconomic factors. For example, the Japanese central bank, which hadn't raised rates since 2007, recently increased its rate from 0% to 0.1% and then to 0.25%. While these numbers may seem small, they are significant because many investors had borrowed yen at low interest rates to invest in other assets like crypto and currencies, profiting from the arbitrage. Now, with the new rates, investors may be feeling uneasy. Although several factors are affecting the US economy, the fundamental data, while impacted last week, remains salvageable and manageable. However, the global economy may face more significant challenges, putting additional pressure on the US economy as the Fed scrambles to determine if it is too late to lower interest rates. Hope this helps clear up some things. As always, like and subscribe to the Finance Bible to be kept up to date on the latest in finance and investing.